Hey everybody, Ryan Wegman here. Just wanted to go over a few things about debt settlement that you might want to know before you actually go out and try to do it yourself or use a company. First things I want to cover in this video is simply what is a debt settlement versus debt consolidation, what are the requirements for your debt and the qualifications to actually do debt settlement, what are the advantages and disadvantages of debt settlement, what about performing a self-conducted debt settlement versus using a company assist, and things that you want to keep in mind when you actually do go and settle your debt. First and foremost, debt consolidation is an arrangement of repayment of your current debt by adding additional financing, typically in the form of refinancing your primary residence mortgage, pulling out some equity, and then paying off the debt. And then what happens? We go back and rack up those credit cards again, and it becomes a very vicious cycle. It will always involve creating more debt. You've got to be able to qualify for the financing and the increased burden of the debt. And it's going to cost you more in the long run through points to the mortgage broker, the extended terms on your mortgage, possibly higher interest rates depending on where the market's at. So you're really putting yourself in a position to lose. Whereas with debt settlement, you actually have the negotiation to reduce and forgive a certain amount of the principal and or lower the interest rates. You get to set up an easy payment plan. You eliminate all the creditor phone calls, and it'll save you money in several ways. The requirements and qualifications are simple. Your debt requirements, you need to have at least $8,000 in debt. Each account should be at least $700 or higher, and the debt's got to be unsecured. Credit cards, student loans, automobiles, etc. Those are the types of debts that you're going to be able to settle with a debt settlement. There are some others, but I'm not going to get into those here. As far as being able to qualify for a debt settlement, you got to be able to prove your financial hardship. You've got to have the ability to meet the new payment plan with the arrangements that we come to, and you've got to be willing to chart the course, stay the full entire length of it, and be willing to change your spending habits. And that's really the most critical portion, to become more cognizant of where your money goes. The advantages of doing a debt settlement is you arrive at one affordable payment instead of many. You get immediate savings. You get to start repairing your damaged credit scores. You'll gain an education in credit, and you'll be able to pay off your debt quicker at the same time. And you'll finally have the ability to gain control over your finances and over your livelihood. Imagine taking back control of your own life. What a great feeling that would be. The disadvantages are pretty obvious. You're going to have some temporary credit score reductions or implications. Possible credit accounts are going to get closed, and you might actually have to reestablish new credit lines. Hey, if that's all in a day's work, that's fine with me. Close them and let me open up some new ones in a little bit of time. That's okay. What's the benefit of doing it myself versus using a company? I'm going to show you here. Doing it yourself and using a company, there are some minor differences, but there's one big advantage that I'm not even going to talk about till we get to the next page. You do it yourself, you have to rely on your own negotiation levels, the skills that you have to provide negotiation, your time constraints, your employment, your breaks, their hold times, getting to a negotiator, etc. You have no knowledge of credit laws and debt laws to leverage. What is your ability to create an offer? How do you know you're making a good offer? What if you offer them 80 cents on the dollar and you could have gotten 10? What if you offered them 20 cents on the dollar and they wanted 40? You really have to know the creditors you're dealing with. And last but not least, creditors aren't stupid. They're starting to actually retaliate for debt settlement and loan modifications. You have no defense from a recourse from a lender. We go over and we use a company, a consumer advocate group, or many others. They have professional knowledge. They have the ability to negotiate. They have the knowledge of the laws. They have the time to follow up, and they keep it allotted for you because they deal with multiple accounts. But if they don't have an attorney on staff, like most of them don't, and they're not an attorney-based debt settlement company, again, they have no defense from recourse. And the problem with most of these companies is that they collect a percentage of the debt, and they put you on, let's say, a 36-month payment program. The first 7 months of your payments go to their pocket. Say you're paying them $1,000 a month. They're making $7,000 before they ever start to negotiate with your creditors. Now you've had 3 to 6 months of late payments, and just a whole nother mess of things happens. You have to protect yourself. We are in the age of lawsuits like never before. Frivolous lawsuits, retaliation lawsuits, you name it, you can be sued. I looked at Johnny funny, and his parents sued me because they thought I gave him a mental scar. I don't think that's appropriate, but that's the society we live in. But as I talked about earlier, legal representation and where I went with all of this is it's crucial for your protection. Attorneys or lawyers can speak on your behalf, and they have a much better negotiating authority. Keyword here is authority. You're protected from the lender's recourse or the creditor's recourse because you have that attorney to handle it for you. The creditors are starting to retaliate, as I mentioned before. Chase Bank, who recently took over Washington Mutual, anytime someone goes in to either settle debt on a credit card or provide request a loan modification, they get served with a notice that they're going to be sued. And the nice part about this is you can eliminate all the risk off your shoulders and all the stress by directing all your creditors to your legal counsel. You no longer have to deal with them. A couple of things I want you to keep in mind when you settle your debt is that some type of financial hardship brought you to this junction in your life. You have to know what it was, be able to identify it so that you don't fall victim to it again. Whether this was in your control or not, 9 times out of 10, we're just not cognizant of our spending. We think that fund money is going to run forever. Accelerated appreciation rates, permanent equity. It doesn't happen. If there's one thing we all know is history repeats itself. This is a big reminder of history repeating itself. Settling your debt's a place for a restart and the replotting of your money habits. Reimplanting and ingraining the thoughts, like I talked about, being more cognizant. Credit is also a very serious wealth creation tool if used correctly. You can leverage that credit into acquiring assets which earn you a return higher than your rate of interest, which equates to a profit. You can also use debt to create wealth if you know how to structure it properly. Most importantly, out of all this, I want you to use your credit wisely. Visit www.usecreditwisely.com. Here we can provide you with bankruptcy counseling and referral services, credit repair and restoration services, debt settlement, debt consolidation, debt elimination, equity forecasting, loan modifications, commercial and residential mortgage lending, commercial and residential real estate services, tax preparation, and wealth planning. My name's Ryan Wegman. I am your mentor, your guide, and your coach to chart you through these unstable financial waters. But the most important tidbit I can give you today is to remember to always use credit wisely.